My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to make a little money. My job is not just to entertain, but to explain what the heck is going on. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. We had a thrill today on the floor of the New York Stock Exchange when the president-elect Donald Trump came to celebrate being named Time Magazine's Person of the Year for the second time. The market may have yawned. Dow actually sinking 234 points, S&P declining 0.5%, NASDAQ losing 0.66%. But there was no yawning when he was talking with an upbeat message about business in our country. Now, I'm well aware that Trump's views on business aren't in play every day here. We had lots of good stocks that really got pounded today. Trump himself wasn't going to give you the green light to buy stocks. I'll have more about my interview with the president-elect later in the show. But if you listen to this interchange, you'll understand that he's not just a cheerleader. What can you say to the working person who owns stocks? Should they buy more stock?
Well, I don't want to get into a situation where they do and we have a dip or something, because that can always happen. You know that better than anybody in the world, probably. I think you're the leading authority in going up and going down, but you always end up. He always ends up. That's the good news.
Look, but there's something to be said about optimism toward business, and that is what I saw today. Hey, look, love him or hate him, Trump's unabashed love for business makes it easier to be a good investor, because investors do need staying power. It's tough out there. You have to be able to own stocks through thick and thin if you're trying to make big money in the market. And you do like owning stocks more when your companies aren't being prosecuted regularly for being too powerful. Of course, Trump's pro-business attitude won't matter every day. There's no way the president can expand the gross margins for Adobe or tell you to ignore the guidance for the next quarter, which was perceptibly weaker, sending the stock down 75 points or 13%. Adobe either has to lower prices to compete or come up with something that makes it clearly superior to its rivals. No amount of presidential optimism is going to fix that. He's not going to send the stock of Chevron up when he says that there'll be much more oil production, that it'll make up for whatever inflation we have in the system. We know that oil execs saw their stocks get clobbered when they overproduced during Trump's first administration. They eventually got disciplined about pumping. But the results didn't kick in until the Biden administration. Yes, ironically, the oils thrived during the Biden regime, which was sincerely hostile to fossil fuels, especially with that moratorium on approvals of new liquefied natural gas exports. But my takeaway from Trump's unabashed pro-oil and gas stance is that America's become such an important part of the oil equation that we can truly bring down the price with our own overproduction. After the very hot producer price index numbers we got this morning, which really hurt the stock market, I found it a welcome word. We don't want inflation to heat up. We could use oil down $10 pronto. But there was something reassuring about the president-elect coming to the New York Stock Exchange that was just like when President Regan came to ring the opening bell back on March 28, 1985. You know, I remember the occasion. I was at Goldman Sachs, probably about 200 yards from here. And when it happened, I marveled that a president was so comfortable ringing the opening bell. His predecessor, Jimmy Cramer, he didn't think much of the stock market. A lot like Joe Biden. Reagan embraced the market, though, and it made you want to go buy something, and it was a halcyon time to buy. I know that's simplistic. I know, but ringing the bell is a big deal because it's a symbol of being simpatico with Wall Street, which actually helps, again, to invest. Coincidentally, we had a huge IPO today, Service Titan, which makes enterprise software for regular people, for tradespeople. Again, Trump had nothing to do with it, but if you got some of the IPO at $71, well, you're now up 42%. Call it ethereal, but it mattered with Reagan, and it matters with Trump, too. How will this new president pan out once he's installed in the White House? Listen to this. Any company that spends $1 billion in this country will be rewarded with lightened regulation.
A lot of incentives are going to be given. You saw yesterday a $1 billion investment, and we give you very fast approvals. Nobody's come up with that one yet, although it seems pretty simple. I think you're going to have some great days ahead.
Of course, even with the president's backing, it's insanely hard to build things in this country. We're a nation of due process, which means important constituents can use the legal system to delay just about anything. But that's not the point. What matters is that we're about to have a president who's the corner man for business. Even if he singles out some actors who he thinks are doing the wrong things, he favors higher stock prices. Just like Regan, who famously said he wanted the bears to be in permanent hibernation. Sounds strange, but that matters. We never saw Joe Biden on the floor of the stock exchange, did we? From my dealings with him from the old Kudlow and Cramer days on CNBC, a political and business show, he simply didn't care about the market. Hey, many don't. Given that my whole ethos is about trying to get regular people to be rich via the stock market, I always viewed Biden's view as needlessly antithetical to creating wealth. Would it have been so hard for Biden to come to the New York Stock Exchange and ring the opening bell? Would it have been so hard? I think the answer would have been yes, absolutely it would have been too hard. The legacy of this departing president could have been that he helped create wealth for the huge number of people in this country through their savings, their 401ks, their IRAs, their pensions. The averages certainly demonstrated that. He could have laid claim to it. Tens of millions of people benefited from the market during his tenure. But then Biden would have been able to be true to his assistant attorney general for antitrust, hammering of Apple, hammering Alphabet. He would have been on the other side of the trade from the FTC's endless harassment of Amazon and its recent investigation of Microsoft. More importantly, it might have threatened his self-image as a champion of the working man. Or to put it another way, here's what I heard when I walked on the floor this morning. Stocks went up these last 4 years despite Biden, despite him. If they go up the next 4 years, they will, at least in part, do so because of Trump, if only because he's willing to take the credit. Here's the bottom line. Biden continually underestimated the sheer number of people who built trillions of dollars in wealth in these last 4 years. So, by the way, did Vice President Harris. Trump embraced the investing class from day one. Politically, that's not always a slam dunk. But today, like that Shining Hill day in 1985, when Reagan stood up here, right there, it's a reminder that the Trump White House will be very much in favor of higher stock prices, and that makes it easier to invest. As far as I'm concerned, that's great for the stock market. Even if today was a suboptimal session, that will mean absolutely nothing in the great long term. Let's go to John in Kentucky. John.
Hey, Jim. This is John. I got a question for you about Linde Corporation, symbol LIN,
Sure.
industrial gas producer. They also have a green hydrogen unit that it's only about 10% of their profits right now. They're spending a goodly portion of their CapEx on it. They're scheduled to grow at over 10% for the next few years, but I'm worried about the stock, even though after seeing them on your program and doing some research and buying the stock, I'm up 80%, and I really like that. But with the changing administration and the de-emphasis on renewables, what do you think I should do with this stock?
Well, John, I got to tell you, I mean, Linde in the end is an industrial company, and industrials do go up when rates go down. You're right. Look, the stock's been weak this year. It's not what I want. However, it's been a great long-term producer, and let's remember that this company has not had the luxury of having any volume growth yet. That's going to happen in 2025. Stay long, Linde, just like we do for the Charitable Trust. Got a lot of talking next week about that when we do our sit down and we do our club call. Anyway, President-elect Trump has embraced the investing class. Hate him or like him, he's done it. As far as I'm concerned, that is great for the stock market long term. On Mad Money tonight, after having a chance to interview President-elect Trump on the floor here, I'm sharing more of my key takeaways about where the market stands under a second Trump presidency. Then Lowe's is firing on all cylinders. I sat down with the company's top brass right over here in Brooklyn. And Under Armour founder's back. Yes, that's right, Kevin Plank. He is at the helm of the iconic sportswear brand, and we're going to hear how he's preparing to right the ship. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.